It's always amazing how a bunch of numbers on a page, something that looks pretty dry, can actually tell a really fascinating story about a company.
Absolutely. It's like decoding their DNA, right? Seeing what
Yeah,
makes them tick.
exactly. And today, that's what we're doing. We're taking a deep dive into the latest financials from Singhe Hospitals PLC. They're a public company over in Sri Lanka.
Right. And we're looking at their interim statements for the quarter ending June 30th, 2025, comparing it back to the same time in 2024.
Yeah, so these aren't just, random figures. They give us a real window into how this major healthcare provider is doing, its growth, its health.
Mm-hmm.
Our mission here is pretty straightforward. Let's unpack these numbers, figure out what they're really telling us about Singh hospitals, and pull out the key insights for you so you walk away feeling like you've got a good handle on it. Maybe even find a surprise or two.
Sounds good. Let's get into it.
Okay, so let's start with the big picture. The income statement, the profit and loss. What's the headline grabber when you compare June 2024 to June 2025? Because, wow, it looks like some serious growth happened.
Oh, serious is putting it mildly. It's not just growth, it's quite a remarkable surge across the board.
Okay.
So first off, revenue. That jumped significantly from about 347 million Sri Lankan rupees up to 466 million. That's roughly a 34% increase. Huge signal of more business activity.
Right. More patients, more services, something's clicking.
Exactly.
All right.
And that flows down. Gross profit, that's after their direct costs for medical services, went from 237 million to nearly 319 million. So they're managing their core costs efficiently even as they grow.
Which is always good to see.
Definitely. But here's where it gets really eye-popping. Profit before tax. It didn't just increase. It more than tripled.
Tripled, seriously.
Yeah. From around 20, maybe 21 million rupees up to over 72 million. That's pretty explosive, especially in healthcare where costs can be tough to manage.
Okay, that's impressive. What does that suggest? Better margins? Volume.
It could be a mix. Maybe higher margin services, maybe just really strong cost control, or perhaps increased patient numbers really hitting a sweet spot. The net profit, the bottom line for the period, mirrors the soaring from about 9.4 million to 55 million rupees.
Wow.
And for anyone holding shares, the earnings per share, the EPS, it jumped from 0.02 rupees to 0.13 rupees. That's a direct increase in value per share.
So, okay, that kind of profit explosion is, well, unusual.
Yeah.
Especially in a hospital setting. What's the context here? I mean, what could realistically be driving that kind of improvement? Is it just filling beds, or is there something more fundamental changing in how they operate?
That's the million-dollar question, isn't it? It points towards potentially very effective management or maybe tapping into a high-demand service area successfully.
Right. Okay, so profits look fantastic. But what about the foundation? How solid is the company itself?
Yeah.
Let's turn to the statement of financial position, the balance sheet. What does that snapshot tell us?
Good question. Because strong profits are great, but you need that solid base. And connecting it to the profit story, yeah, they're definitely strengthening their core.
How so?
Well, total assets are up nicely from about 1.35 billion rupees to 1.55 billion. But digging into the current assets, the short-term stuff, is quite revealing.
Okay.
Two things really jump out. Short-term investments have, skyrocketed from roughly 14 million rupees to nearly 99 million.
Whoa, that's a big leap.
It is. And their cash and bank balances also saw a healthy increase from 45 million up to almost 72 million.
So lots more cash and easily accessible funds. What does that signal? Future plans, just better liquidity.
It signals flexibility, primarily. Great liquidity. It gives them a cushion, maybe funds for expansion, new equipment, acquisitions, or just weathering any bumps in the road. It's a strong position to be in.
Makes sense. And what about the other side? Equity and liabilities.
Equity, the owner's stake, is also looking stronger. Total equity grew from around 808 million to 967 million rupees. And that's reflected in the net assets per share, up from 1.87 to 2.24 rupees. So the underlying value per share is increasing too.
Good.
On the liability side, it's interesting. Their long-term debt, non-current interest-bearing loans, actually decreased significantly from about 127 million down to 95 million. That suggests they're actively managing and paying down long-term debt.
That's positive debt management then.
Right. But their short-term liabilities, things like trade and other payables, basically money owed to suppliers, and for ongoing expenses, those have increased from 84 million up to 129 million.
Okay, so paying down long-term debt, but short-term obligations are up. Is that typical with growth?
It can be, yeah. More business activity often means higher short-term payables. It's something to watch just to ensure they manage that short-term cash flow effectively. But given the cash increase we saw, it seems manageable right now.
Right, it feels like a company really on the move, growing assets, building cash, strengthening the owner's equity.
Yeah.
What does this combination suggest about their stability for the future, or their capacity to maybe expand even more aggressively?
It definitely suggests increased stability and a much stronger capacity for future actions, whether that's organic growth, acquisitions, or investing in better facilities and technology. They're building a strong platform.
Okay, so profits are up, assets are growing, but you know what they say, cash is king, right?
Always.
Profit on paper is one thing, actual cash moving through the business is another. So let's look at the cash flow statement. Does it back up this positive story?
It does, and it adds some important nuances. The key question here is, are they generating cash from their main business, and what are they doing with it?
Right.
And the answer to the first part is a strong yes. Net cash from operating activities, cash from their core day-to-day hospital operations, increased nicely. From about 50 million rupees to 76 million. That's crucial for sustainability.
Okay, so the core business is generating more cash. That's fundamental.
Absolutely fundamental. Then you look at where the cash went. Cash flows used in investing activities saw a really big jump, from using only about 2.6 million last year to using over 53 million this year.
53 million used in investing. What were they buying?
Primarily two things flagged in the report. One, acquisition of property, plant, and equipment, think buildings. Medical gear that went from about 1.2 million up to over 16 million.
Okay, significant investment in physical assets.
Exactly. And second, a large new investment in fixed deposits, basically setting cash aside in a longer-term deposit, over 30 million rupees this year, which wasn't there last year.
Interesting. So spending on upgrades or expansion and putting a chunk aside strategically.
Precisely. It shows they're investing in the future of the facilities and building up reserves. It speaks volumes about their confidence.
And financing activities. Paying off debt.
Yeah, the net cash flow from financing activities was negative, mainly reflecting those repayments of borrowings and leases we talked about from the balance sheet. Pretty normal for a company that's generating good cash and focusing on strengthening its financial structure rather than taking on lots of new debt.
Got it. So it really paints a picture of a company that's performing well, generating cash, paying down debt, and investing heavily back into itself, both in physical assets and financial reserves. That heavy investment, it really signals confidence, doesn't it?
It absolutely does. You don't make those kinds of capital expenditures and lock up cash and fixed deposits unless you feel pretty good about where things are headed.
Okay, fascinating financial picture. But how is the outside world reacting? What's the market saying about Singhe Hospitals? And while we're at it, who actually owns this company? That can matter a lot.
Right. The market perception often validates or sometimes questions the financials. And here, while the market seems to have noticed, big time.
How so? Share price.
Dramatically. Look at these numbers. Highest price per share during the quarter last year was 2.5 rupees. This year, 8.40 rupees.
Wow.
Lowest price went from 2.0 rupees to 2.7, and the last traded price at the end of June. It jumped from 2.30 rupees in 2024 to 7.80 rupees in 2025.
That's a massive increase in just 1 year. Investors are clearly very enthusiastic.
Extremely enthusiastic. It suggests strong confidence tied directly to this performance we've been discussing.
And the ownership, is it widely held?
Well, it meets the public listing requirements. The public holding is around 13.25%, held by about 1,750 shareholders. That's above the Colombo Stock Exchange minimums of 10% float and 200 shareholders.
So it complies.
Yeah.
But 13.25% isn't huge.
No, and that leads to the really interesting point here. Ownership is highly concentrated. Mr. Amwirazing holds 86.41% of the shares.
86%, held by one person.
That's right. He's also the chairman, as we'll see later. So while it's a public company, it's very much controlled by a single majority shareholder.
Huh. That's definitely an aha moment, especially alongside that soaring share price. What are the implications of having such a dominant shareholder in a public company that's performing so strongly? Does it streamline decisions, or are there potential governance considerations?
Both, potentially. On one hand, it can allow for very decisive long-term strategic thinking, almost like a private company's agility. On the other hand, it naturally raises questions about minority shareholder influence and the dynamics of board oversight when one individual holds such overwhelming control. It's a significant factor in understanding the company's context.
Definitely something to keep in mind. Okay, let's just quickly wrap up with the formalities, the notes, and the corporate details. Anything important in the fine print or about the leadership team?
Yeah, the boilerplate stuff, but it provides important context and confirms due process. So first, a key caveat. These figures are provisional and still subject to a full audit. That's standard for interim reports, but important to remember.
Right, not the final audited word yet.
Exactly. The board of directors officially signed off on these statements on August 1st, 2025. They also note that nothing significant happened between the end of the quarter, June 30th, and that signing date that would require changing the numbers.
Okay, good to know. Stable picture post-quarter end.
And regarding the board, as mentioned, Mr. A.M. Weersing is the chairman. Mr. Navindo Weerasing is the managing director. There was a recent change, too. Mr. Chaminda Kumarasiri resigned on June 6th, and a new independent non-executive director, Mr. M.S.J. Fernando, was appointed shortly after on June 11th.
Interesting. A fresh perspective on the board, perhaps?
Could be. Often bringing in new independent directors is seen as strengthening governance, especially relevant maybe given the ownership structure. And finally, just the basics. Confirmed as a quoted public limited company in Sri Lanka, registered office in Rathnapura, listed on the Colombo Stock Exchange.
Got it. So that rounds out the picture, provides the official frame around these impressive numbers. It's a good reminder of the governance and reporting structures in place.
Absolutely.
Okay, so let's recap quickly. We've looked into Singhe Hospitals PLC's recent quarter, and wow, the story is one of really impressive financial growth. Revenue, profits, earnings per share, all showing significant jumps.
Yeah, and backed by a strengthening balance sheet with more assets, particularly cash and investments, and fueled by really strong cash generation from their core operations.
Which they seem to be reinvesting wisely in assets and strategic savings. And the market has certainly taken notice with that huge surge in the share price.
Definitely. Even with that very concentrated ownership structure under Mr. Weersing holding over 86%.
Right. So that brings us to a final thought to leave you with. Considering this remarkable performance, that aggressive investment strategy, and that highly concentrated ownership, what might this signal about Singhe Hospital's long-term ambitions?
Exactly. Does it position them for potentially dominating the healthcare scene in their region? And perhaps more subtly, what unique challenges or maybe even unique opportunities does that tight control present as they navigate this growth path going forward? Something to definitely ponder.